Hi, my name is Doug Goldstein. Thanks so much for joining me today. I'm going to be talking today about SMAs, separately managed accounts. Perhaps you've heard of them often called managed money accounts. The reason that I'm talking about it is that in my capacity as an investment advisor and a financial planner, I probably help clients to set up managed money accounts more than most any other investment that's out there. So today we're going to talk about what they are and how they work, and if you have any questions at any point, please get in touch with me. You can go straight to our website at profile-financial.com and just click on Contact Us. A separately managed account, and again I'm going to use the term interchangeably with a managed money account, it's a managed investment account. Normally brokerage firms will offer these services to their clients. And what it is that let's say that you have a certain amount of money that you want to have managed in, for example, stocks or bonds or other types of investments, but you don't want to deal with the day-to-day operations. So in the old days, people used to hire a stockbroker, and the broker might trade for them. But over time, people realized that that was not a terribly efficient way to do it. The results weren't terribly good. The brokers had lots of other clients they had to deal with, and there was no specific service that allowed you to get high-level money management. Of course, for very, very wealthy individuals, there were possibilities to get money managers who focused only on their accounts, but that was only if you had a lot of money. In fact, in those days, the minimum investment could be $500,000, $1 million, or even more. Today, the technology allows these same money managers that are really institutional level money managers that normally manage money for institutions, they could manage portfolios for individuals who, let's say, have as little as $50,000. So what sort of investments will you find in a managed money account? Probably the most common would be what you see on the right side of the screen here: stocks, bonds, mutual funds, and ETFs. ETFs stands for exchange traded funds. These are also a type of mutual fund, but they just trade on a stock exchange. Other managers may specialize in a certain area. For example, you might have a manager that buys REITs, R-E-I-T. REITs stands for Real Estate Investment Trusts, and maybe that's their whole specialty. There are other money managers that may specialize in alternative investments. These might be things like hedge funds or commodities or futures or currencies. There's so many different possibilities of the types of investments you'll find, but let's today focus on some of the more basics, the managers that deal in stocks, bonds, mutual funds, and ETFs. The main advantage to having an SMA, a separately managed account, is that you actually own the individual securities rather than holding them as a unit in a mutual fund. So there are pros and cons to both of these, but one of the main benefits of owning the individual mutual funds yourself, or the individual stocks or bonds inside the managed account, has the tax benefit that the day that you go into the program and buy it, that's your cost basis, and eventually when you sell it, that'll be your sale price and you'll pay tax on that. Perhaps if you've owned mutual funds in the past, you've seen that sometimes you buy a fund, the value of the fund goes down, but at the end of the year you still get a message from the mutual fund that says that you need to pay tax on a capital gain. And you say, but wait a second, I didn't make any money. But what really happened was that inside the mutual fund, the money managers were trading, and some of the positions might have been profitable, that they may have bought years before you ever even owned the fund. And that can create a taxable event to you. So it's nice having a managed money account where each of the positions is something that you bought at your own time, and you know that if you sell it, and hopefully there will be a profit, you'll only be paying tax on profits that you've made. So that's probably the main reason why it's good in terms of tax management. There's also dividends. You can be in touch with your money manager to help try to express your interests, whether you're looking for income. A lot of times the money managers might buy bonds that will pay interest at certain times during the year, or even high-paying dividend stocks could offer dividends at certain times of the year that are convenient for you. So there is a certain level of customization which is available, and a lot of people like that. Moreover, let's say there are certain areas you don't like. You don't want to own tobacco companies, or you don't want to own weapons manufacturers. Or let's say that you work for a major high-tech company, and as part of your job there you own stock options, or you have a lot of that company in your 401k plan, or you've simply bought a lot of stock in the company because you believe in it. You could go ahead and tell your money manager not to own a specific stock in your portfolio. That's different from a mutual fund. You could never call up a mutual fund, which is really a basket where there could be millions or hundreds of millions or literally billions of dollars. You can't call up the managers and say, hey, listen, I work for XYZ company. Would you mind not owning that in your portfolio because I don't want to be overweighted there? You would not be able to do that with a mutual fund, but with a separately managed account you could. And you could also choose managers that have specific specialties that are of interest to you. For example, if you are looking for investing in green energy or in pro-environment issues. I think the reason that people like having money managers is because they know that the money managers who are dealing with the day-to-day operations, they're professionals, they're competing with each other to try to get the attention of your investment advisor. I can tell you that as an investment advisor, I have to look at many money managers to find ones that are appropriate for my clients, and I know that the money managers are doing the very best they can because they know that if they don't do a good job, I'm simply going to look at the next one on the list. So I spend a lot of time then not having to study the markets and watch every trade, because it's impossible as an individual advisor to know everything going on. But I can spend a lot more time with my clients to get to know what their needs are, what their goals are, what's their tolerance for risk. Do you know how many times I've seen portfolios that people don't even understand how much risk they have in it? So I want to spend my time explaining that to clients and tailoring their portfolio so that their overall big picture matches what they're trying to do. And then we use money managers to handle the actual trading, especially for the riskier side of the portfolio, which in general would be the stocks. So you have the benefit as a managed money client that you own the stocks in the portfolio. There's a major brokerage firm or bank that has the custodial responsibility, meaning that they're actually holding the securities and they execute the trades and they'll send you their statements, but you don't really have to deal with any of that. It's all handled for you automatically. So let's take a look at a few other factors that are important for people. You may have noticed that the image we've used for this presentation is a chessboard, because managed money is a very strategic way for people to handle their money, and I think it's a very good comparison. So if you're a strategic thinker and you like chess, you'll probably like the way money managers handle the portfolios. One of the main numbers you have to look at with a money manager is how they charge. There's the fee structure, and it is different depending what brokerage firm you go to and what money manager you work with. As a general rule, I think that money managers charge a percentage of assets, and they do not charge trading fees, so that you don't have to worry if the manager is buying and selling and buying and selling, because that's part of their strategy. You don't have to say, oh my gosh, I'm probably paying a lot in commissions for this, because you don't pay any transaction fees in the account in most cases. And the benefit of paying a fixed percentage, whether it's 1.5%, 2%, 2.5%, could be more or less than that also, is that you know that the only way for the money managers to increase their income is to increase the size of your portfolio. They will make more if the value of your account goes up, and similarly, they will make less if the value of your account goes down. There are a number of services that you can get with money managers. One of the biggest one is this concept of blending, that the money managers, and depending how big your portfolio is, you might actually choose more than one different money manager, but they can blend portfolios so that you're not overweighted in one area. You might choose a money manager that specializes in international investing, and another one perhaps that specializes in large cap stocks. Those would be stocks of big companies. And by looking at them together, you can make sure that you don't have overlap. And there are many managers who will cover multiple areas of the market, so with one money manager you could have a very broadly diversified portfolio. Now don't forget, diversification is a great idea in investing, but it is in no way a guarantee of your principal. It just spreads out the risk and follows the advice of your grandmother, which is don't put all your eggs in one basket. One of the things you want to look for when you have an SMA, a separately managed account, is that you can have good online reporting. So ask your advisor what it is that you'll be able to see online. The nice thing, of course, is that you don't have to watch the portfolio every day. You can just watch it from time to time, but it's great to be able to get good online reporting. Also, you may want to make sure that the setup of the SMA is appropriate given your tax situation. A lot of times accountants call me and say, Doug, I have a client who's got a tax issue and I think that a managed account would be appropriate for him. So speak both to your financial advisor as well as to your tax advisor to make sure that it's an appropriate type of investment for you. And then when you get it set up, make sure you understand the different parts. It's not so complicated, but there are a few different areas that different professionals are handling for you. The main contact you'll have will be with your financial advisor or your investment advisor, and you'll speak with him or with her and explain your interests and your goals. And then the financial advisor is going to find a money manager. It's really a money manager company. We often just use the term money manager, but you shouldn't think that it's some guy sitting in an office trading your account. These are normally major companies that handle billions of dollars for major institutional clients as well, and they will also be able to handle your account also, as well. So I think that when you're looking for a tool to manage your portfolio, if you're not the type of person who likes to be involved in the day-to-day operations, consider using money managers. Now, it is true that even today, there are people who like trading stocks on their own, and I've spoken with these clients, and they insist that they prefer to have their hands in the pot and to make all of the decisions themselves. But mostly, I found that people have looked at the academic studies, or we've discussed the fact that when individuals trade their own portfolios, they tend to underperform the market significantly. And I think, therefore, a managed money account is probably the best tool that you can have for long-term investing when you want to have a broadly diversified, professionally managed portfolio. Thanks so much for listening. If you have any further questions, please be in touch with me. Again, my name is Doug Goldstein. You can check out our website at profile-financial.com. Click on the Contact Us button if you have any further questions.